Hi, and welcome to this discussion on the defense sector. Vikas, defense has been a pretty exciting space for all the investors for many years now.
Yes.
We just wanted to come back and discuss that how we are looking at the overall growth outlook for this defense sector. What are the valuations that are looking, and how investors can go about, approaching this from an investment viewpoint, broad basing, and looking at the, matching the growth and the valuation metrics at
Right.
the same time.
Right.
So let's start with the first thing that recently there was a budget. The government came out with a
True.
budget, and there was no specific mention of the defense allocation
Yes.
significantly.
Yes.
Going, and that was expected over the last few years. We have been seeing that the budget allocation have been going high.
True.
So there was kind of, is the government focus changing from defense, or is no more going to be an exciting growth opportunity?
Right. Right.
So how do you
Yeah. So people were expecting. I mean, obviously, the investors or potential investors were looking at defense sector, uh, and it has been one of the most rewarding over
Yes.
last 3 to 5 years. Right.
Right.
I mean, let's not forget that it's one of the most rewarding sectors, and so it attracts attention of a lot of investors, and everyone was waiting with high hopes in the budget.
Right.
And in that long speech, not a single word was there. So naturally, a lot of people were disappointed, I think. But this is exactly the headline that the government quietly increases the defense
Right.
budget by.
Yeah, so in fact, I was
So-
looking at the fine print kind of thing, and I saw that the defense budget for the capital outlay went up by around 9.4%.
Yeah,
In fact,
I think that's one of the largest increases
Largest
across any line
any
item in the budget,
significant,
right?
yes, exactly.
Yeah.
So that's,
and on a big base.
And on
I
a
think
big
it's one
base.
of the largest allocations as
absolutely.
well.
So going to 1,72,000, 74,000.
So more than
crores.
20 billion.
Yeah. So
It's just capex budget.
and it's continuous. Like last 2 year CAGR is around 10% of the capital outlay on the on defense. So obviously the budget allocation is coming. The
Yes.
focus is
Yes.
absolutely there, and I believe that it's pretty much evident in the companies' order books, especially the pure play defense companies. We have been talking about or looking at this data now. Industry also looks at this data, quite closely, but it's quite astonishing to see, somewhere around 4 to maybe 8 times, 10 times of order book already sitting, as a
Of the
multiple
annual
of your
revenue.
annual revenue. And the management, kind of commentary is very bullish that they are very confident in kind of doubling or tripling their, existing order books, in next 2 to 3
So
year
there is a
order.
reported order book,
Yes,
which is 4 to 10 times. Then there is a interaction with the management,
Yeah.
where the management is sharing their expectation of how the order book will grow. So
absolutely.
this is the second. This is how big is this compared to the actual reported order book
So this is like, again, the
Management
numbers are like
commentary
2 to 3 times, right?
of existing order book.
existing order book, right? So if it is like 1 lakh crore today, it could be like in 2 to 3 times, it could be 3 lakh crores for one of the
So
largest.
4 to 10 years
Yeah.
will become 8 to 30 years.
Yes.
So maybe not 30 years, but
But-
the lower, 4 into 3 maybe.
Yes,
So 4 to 8 to 15, 16 years at least.
exactly.
That's
Right.
the kind of second group, the reported order book, the expected order book.
Correct.
Yeah.
Correct. And this confidence, or why the management is able to,
And this is
talk
across
into-
the companies.
This is across the companies.
pure play defense companies.
across the
Yeah.
companies. Yes. So easily, doubling.
And especially PSU guys.
PSU guys.
So
yes.
they are in closer contact, and
Yes.
they are brought as informal advisory also, etc. Right. So
Yeah,
including
and
all of that.
in fact, there is clear cut information available, and that's how management is also has that kind of a confidence to put
Okay,
out
so it's
these
not
numbers in
some
public.
vague number
No,
to be
no,
claimed. It's
no.
a
Yes.
total of some specific.
So the other numbers that we have been tracking closely is the AON, the DAC, the Defense Acquisition Council. They put out what is accepted as necessity kind of a.
So this is the third group.
Third group, exactly.
So reported
Uh,
management expectations,
expectation
and
and
then
the
AON,
AONs, right?
acceptance of necessity by the Defense
By the
Acquisition
Defense.
Council.
So they put out clearly that, okay, for example, last year it was around 3.4 lakh crores of fresh orders that
Acquisitions they have to
acquisition
do.
approvals they gave out.
Sure.
Okay, and with a reasonable detailing that okay, these are the defense systems they are going to acquire, got approval for, and things like. So the management got an idea from that also, that okay, I am going to get these many new orders for this particular defense system and so on. So this is the third element of kind of a latent order book, what you can
Sure.
call. The order book
Sure.
is big, it is growing, and there is a latent order book which is available, which is not getting recorded as of now, right now, right?
But even that is hard facts.
There's hard facts, yes. So there's a absolute clarity in terms of how the growth is going to be, and
For the sector.
For the sector, right? Obviously, it will take time for executions. Management
True.
have guided on broadly double-digit growth rates
True.
across the pack. Some companies are more aggressive, some are less aggressive in terms of that. But I think on this count, the growth outlook looks pretty strong, right?
Growth is absolutely strong, and I think with such large pipeline of
Right.
of 4 year, 10 years, even more, that is not acceptable obviously to the client, which
Right.
means the Indian military,
Right.
or the defense forces all put together. And so I think the companies are going to be forced to grow their annual top line very, very fast.
Absolutely.
So,
And some companies have done capex in terms of establishing fresh manufacturing
right.
capabilities. So that will also turn around in some time.
Right.
And
Right. Yeah, I think brownfield expansion for the PSUs is very easy, because they have a lot of capital assets or land and the basic infrastructure in place, and they have to put the specific infrastructure for whatever project they are working on.
So this was more specific, I think, to India. But let's talk slightly broadly from a geostrategic viewpoint, and what is the need, to grow the defense expenditure from that viewpoint.
Correct. Yeah, I mean, globally, obviously, we've been noticing from last 2 to 3 years, right? Large amount of instability across the globe, right? Different regions. So Ukraine, Russia has been there now for more than nearly 2 years, right? It's going on, so that's well known. The other one is the Middle East, right? So that is also now highly unstable. Our own neighborhood has always been unstable, and there is the recent Bangladesh thing. Now it's like across all around India, again there is instability. China, Taiwan, China, US, Cold War, all that was also like always getting stronger. Germany too decided after the NATO Ukraine thing that they will also start spending. So after World War II, this is the first time they'll be allocating a large, nearly 2% defense budget. So NATO normal base level is at least 2% of your GDP, is the defense spending. So across the globe and smaller countries, because of the Middle East and all that, Ukraine, a lot of small countries across the world are extremely conscious now that they need to spend, and they're looking at India as a supplier, because from the quality value proposition and quality and cost value proposition, India is probably one of the best.
Absolutely.
Yeah. So that is another huge opportunity. And we have seen BrahMos has already been delivered, and many other things are getting, in demand and getting delivered.
So I was just running some numbers, looking at where the defense expenditure for, let's say, US or China. Again, for China, there is a disclosed defense expenditure, and there is people expect that it could be almost 3 times of what they been disclosing. But US is somewhere around 3.5 to 4% of the GDP. That's like $1 trillion they are spending. And India, we used to be around 2.5% in the last 20 years average, but right now we are doing just around 1.5, 1.6%. Okay, so if we just increase our allocation back to, let's say, 2.5% of the GDP, and we put more, right now we are putting 38% into the capital capex kind of activities, but let's say if we take it up to 50% of the total defense budget, in, let's say, next 7 to 10 years, there could easily be a possibility of a 20% kind of a CAGR growth of defense capital allocations, that India needs,
Right. Right.
to be ready with all the kind of uncertainties and challenges that you just discussed about, globally.
Absolutely. And see, earlier it was high percentage, but it was a low number because the GDP itself was,
Right.
1 trillion
Hmm.
or less than a trillion at that point, right?
True.
Or 1 to 2 trillion. And then today we are at 4. Next 10 years, like let's say 2033 or 35, somewhere in that range will be around most likely 10 trillion, right?
Right.
So now, see, earlier you were forced to do 2.5, and still you were a very small budget. Now, even with 1.6, 1.7, it's one of the
Reasonable.
largest budgets across. It used to be number 3.
Right.
Now, with Russia and Germany spending more, we are at number 4 or
Right.
maybe even 5, for all I know. But we are in that range. Okay. Now, again, when you need it, and you are a 10 trillion or a 6 trillion or 5 trillion economy, then you have a lot of discretionary capability now.
Right.
And you are in a tough neighborhood. So you need to spend, and you are supposed to be, one of the largest economies across the world, the third largest.
Right.
So you have to spend on defense. People expect outside the country as well, and for your own commercial needs,
Right.
you need safety and defense.
Absolutely. I think from a growth perspective, definitely defense sector, fits the, our growth vector criteria of, there are
Absolutely.
multiple external stimulus in terms of, why the growth will be there or it will sustain.
Absolutely.
Let's now talk about, the valuation aspect and
Sure.
the future expected return. Like, we cannot predict that, but how one can
Sure.
kind of, orient themselves so that
Super.
there are no surprises.
Super.
So one fact is that the pure play defense companies have moved. There's a significant repricing that has happened,
Absolutely.
and that's is shown
All
in
are, lot of them have become multi-baggers and maybe
Yes.
even like 10 baggers or more, right?
Yes, absolutely.
Yeah. Yeah.
So there was a natural need to look at defense from a more holistic perspective and look at defense from a more geostrategic perspective.
Absolutely.
And that's what we have been doing. And in the last update on the portfolio, we broad-based the whole defense theme and included many interesting and very critical companies in the portfolio.
Absolutely.
Two main objective: one, to broad base and capture more opportunities,
Absolutely.
and then keep the valuations in focus, so that the future expected return also remains favorable for the investors.
Absolutely.
But right now, as we see at the portfolio, we have already somewhere around 30 to 33 PE.
Correct.
On FY25 and 26 basis, it comes to around 30 and 25.
Okay.
So compared to the, let's say, a multi-cap index or a larger mid-cap index, which is currently at what, 25 to 28 PE multiple, I think it's reasonably priced, and the growth outlook, obviously, it's pretty strong. So if you look at the overall growth and look at the valuation, it's still a reasonable deal. This is what I believe, what the numbers are showing.
No, absolutely. But what was the valuations 3 or 5 years or 7 years back were much lower.
Much
right?
lower, right?
Depending on when the companies got listed.
Right.
Those were, at what? I don't, maybe a single digit
Nearly
Ps,
single digit or
right?
yeah,
And so
low
from
teens.
single digit PEs, some of the companies have gone to 40, 50. So that's like nearly 10 bagger, right? And
Right.
some are 100 or 70 or whatever it is, or 40. So many of them are nearly 10 baggers or more. Now, you cannot expect that again to happen, right? So currently, the current PE, you said 33, 30, 25, right? Something like that. So which is quite fair for something which is 15, 20 or higher percent CAGR, right? So it's slightly premium to Nifty, but the growth is significantly premium to Nifty, right? Nifty 500 or 50, whatever you want to choose. So that way, it's fairly priced. So the expectation is, since growth is higher, much higher compared to the PE premium, it should likely deliver alpha over the index, right? Over the broad market index I'm talking about. And you can compare to the Nifty Defense Index as well. There the P difference would be very, very stark.
Correct.
Right? I mean, Nifty Defense Index, I don't remember what it is, but it's published publicly.
Yeah.
It's what, 60, 70, something like that?
Must be very high. I have also not looked at it.
No
but
issue.
Yeah.
So that's some number. We have 33. It is definitely likely to be much lower than that. Uh, what we have is a mix of the new dimensions of defense, which we discussed earlier.
Right.
And we will continuously be looking across those unconventional ways of taking exposure to defense.
Right.
And we discussed this in earlier videos also. I think that army rides on its supply chain, you know.
Right.
So you have to look at logistics, transportation, mobility of the material, weapons,
Absolutely.
food, etc. for the army.
Energy security.
Energy, you know, then defense, cyber defense.
Yeah.
Right. Then presence across the world with ports, etc. Then whenever you do capex, whenever you do large anything, people, other companies who will contribute in the engineering or whatever of that.
Right.
And then the financing for those companies.
Okay.
Right. So this is like very broad set of things. You need rare earths, you need strategic materials, you need strategic energy, you need power,
Logistics.
you need so many things. So you have to think about it broadly.
Sure.
And widen your universe so that you have enough to choose from, because finally everyone is investing for getting, you know, their investments to grow.
Right.
And the purpose of having active manager or choosing a theme is that it will do better than the broader market. So somebody is taking a risk of that theme, but expecting the rewards if that theme works out. Absolutely. So this theme, the likelihood is extremely high that we just discussed the growth. So it's a huge opportunity, but we have to take the exposure in creative ways. Correct. If the valuations are high.
Sure.
And we will be doing that continuously.
Yeah. So just to wrap this up, and I think kind of reiterate the whole approach to investing, where we still believe in identifying growth opportunities and growth factors, but still maintaining a diversified portfolio and allocating to multiple growth factors. So you are on a very solid footing as an investor.
Absolutely.
So maybe we can just conclude with those.
You want to? Yeah. So see, my ideal recommendation, obviously it changes from person to person. It cannot be investment advice. I mean, that is delivered one-to-one. But general principles is, whatever is my equity portfolio. We have discussed this in earlier video as well, so you can go and look at that. But whatever is your equity, let's call it 100. Within 100, 40 to 60 should be core. Core, which means flexi cap, multi cap, large, mid, small caps. Right. Okay, any combination of this, which are all sector kind of allocations. So you need to do 40 to 50 or 60% in that. Rest of the money, let's say 40 to 60%, you can invest in 10% each. So 4 to 6. And somebody could do 5% each. So you could take it up to 10 or 12
10 such opportunities. Right.
And the advantage is that all of them are high risk because you are in a theme. But then your allocation is only 5 to 10%. Correct. If it works out, there is a decent reward because all of them have some kind of an opportunity. That is why you would be investing in those things, right? So obviously, out of 5 or 10, 2 or 3 might not work out. The remaining will work out. They should work out very, very well, so that the overall portfolio does better.
Yeah, so that's very important. Like and when you started with, let's say, some 5% or 10% target allocation, now that allocation has gone beyond because particular growth factor has worked significantly well, then you also need to kind of rebalance your portfolio at your end, right? So taking out something which should have been 10%, now it's 15%. You need to take out 5% and reinvest it either in the core or in some
another theme
growth factor.
Absolutely.
So that is very important.
So all the time you are again at 40 to 60% core,
right,
and 5 to 10%
some growth factors or themes. Yeah. So yeah, so that's what we wanted to highlight, and do look out for direct communication for existing investors and clients in terms of through maybe emails or WhatsApp, where we'll reach out to you, let you know about various offerings or how you can further diversify your overall portfolios. And thank you for tuning in.
Thank you.
So always keep in mind that investment in securities market are subject to market risks. Read all the related documents carefully before investing. And also that registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors.